Thank you very much, Adrian, for having me here again. You already see from the front page of our presentation that we are basically active in two different sectors, industries. There's one which basically most of our customers who do not come from the mining industry like very much. It's the island sector. This is as well about off-grid power generation, high electricity costs, where renewable energy can play an important role. Nevertheless, we make most of our money, most of our revenue actually in the mining sector. But more on the renewable energy guys than from mining companies, so we haven't sent a single invoice to a mining company yet. What do we actually offer? It was pointing to the back. So basically, Adrian has already said that in the introductions. We provide market intelligence. We help companies with market entry into the mining sector, into other into other industrial and commercial sectors. We organize partnerships in between component manufacturers, project developers, EPCs, and investors. We also communicate quite a lot. We have done plenty of reports, most of them actually on topics about renewables and mining. Normally we write press releases based on these reports, and I think in total there have been more than 80 articles in the mining press, in Mining Weekly, Mining World, Mining Magazine, and so on about the topic of renewables and mining, in which we have been involved. Then we work also a little bit more on the project side. 1 year ago, at conferences that were about renewables and mining, actually financing, I would say, was a very important topic. The mining crisis maybe was even a little bit more severe than today. Everyone agreed that it is hardly possible for mining companies to finance, and as well typical investors were a little bit reluctant at that time to consider mining companies as off-takers to sell energy to mining companies based on PPAs. I've done a similar speech in London. At that time, we were very glad that we have closed first corporations with investors. In the meantime, actually, I've listened here to so many presentations, and I think financing, at least PPA-based financing solutions, is basically offered by quite a lot of companies. I would like to do or talk about some select topics. Financing has been quite a topic throughout these 1.5 days. If I go fully through my standard presentation, it will be pretty much repetition. So I've selected some topics. They do not necessarily fully correspond to the slides. Most of it, however, is on the slides. By the way, are you wondering sometimes why the renewable energy guys are really harassing you as a mining company so much? Why are they not focusing on other applications? Why is this the timing that the renewable guys are after you, that so many players from all over the world, from Australia, from Europe, are coming over here from Toronto? Basically the background is that many traditional markets, especially in Europe, are breaking away. Renewable players, developers, EPCs, investors do not see large-scale installations in their domestic markets, in the markets they have been active so far. So just in this transition from incentivized projects through feed-in tariffs, through renewable energy credits and so on, where are the low-hanging fruits? I think this is the basic analysis that drives many renewable energy companies to the mining industry. In mining, you have, in theory at least, very many remote locations, so high energy prices. Your energy consumption is extremely high in comparison to most of the other off-grid and remote applications. And the credit rating of most of the mining companies is particularly good. What would be the alternative? Selling renewable energy, for example, to agricultural companies, to farmers. They have a completely different credit rating, and their external financing actually would be really a problem. So this explains a little bit why you as a mining company or as mining companies are so much in the focus of renewable energy players. Last year, I've already mentioned, we've sent out a communication that we were building up a pipeline for an investor who was looking to invest 100 to 200 million euros into mining projects, off-grid projects, with a focus actually on mining for the reasons which I have also explained just before. A little bit, what have we seen, or first of all, what was our role? We sent out a communication. This investor did not want to communicate under his own brand. Last year in October, this was enough for basically getting into the main publication. So there is someone who wants to invest into renewable energy installations that are next to mines for powering mines. If you send out the same press release today, I think no one actually would care anymore, as there are so many companies active. What have these guys actually realized? There was quite some learning curve or learning process also involved. In the very beginning, it was Africa is not at all a problem for us. So we go basically to most of the African countries which are not in war, which do not have a severe economic crisis, and we would finance. So there were quite some interesting leads. If you do not take the country risk so much into consideration coming in, and then on a more on a deeper analysis, the country risk actually was quite a problem, and many projects were not considered as feasible because, especially in African countries, the country risk was unacceptable. From this investor's point of view, they said, okay, basically, if the mining group, if they are able to have a PPA with the mining group and not with the individual mine, they would still go ahead and they would go into these countries. From most of the mining companies, that was not really the preferred solution. In the end, what we did then was sometimes offering two different PPA prices or two different prices in the PPA, but even that stopped quite some projects. There was a spread, and as well from the mining side, there is a clear preference. This is what we have seen, to sign the PPA based with a particular mine, and not to give any parental guarantees from the mining group. So if this wasn't the case, this could open quite some doors on the financing side. This is what we have realized. From an investor's point of view, most of the renewable energy investors, actually, they can live with rather low returns. So return expectations for countries like Canada would be probably in the range of 10%. If you go to African countries, and if it's not really the risk, if the risk is not fully mitigated by signing a PPA on a group level, that could go up to 15, 16, 17%, leaving aside countries which are really on war or on a deep crisis. Most of this is actually due to the counterparty risk. This is what we have seen. even though I sometimes feel that the technology risk is as well to some extent under-evaluated. Risk mitigation obviously is possible. How can you mitigate the technology risk? One of the means is to have an EPC who is bankable, who is likely to be there still in 10, 15 years. So I think already, or still 1 year ago, 1.5 years ago, we have seen many smaller players from the renewable energy side who wanted to make business with mining companies. And in this learning process, right now we see more and more large players as well coming from the utility side, which are entering this market and who are more accepted from mining companies, but especially as well from external investors who would build or would own the asset and sell then electricity on a PPA basis to the mine. So it is a kind of risk mitigation as well for these investors. What we have seen, plenty of the bigger players who do project development and who have as well EPC ambitions are not as active out there as some local players, especially in African countries, in African markets. So there are companies who have identified mining very early as a target sector, and then who they want to build the project. And then obviously external investors are not too happy to work with these companies. What we try to do is to get some of the bigger players on board and agree upon a certain sales price, or that the local player is still involved in this project in these countries. Another point is project size. This particular investor looked only at projects being bigger than 10 megawatt, but his sweet spot, he identified investments from his perspective, equity investments in the range of 10 to 15 million euro. In the meantime, I think we see quite some flexibility as well from companies or investors who are more linked to family offices and private investors to go for smaller projects to finance as well smaller projects. With this partner company, what actually is quite an advantage, they are interested in financing fully equity at the beginning and then refinance the project later on. So we have seen that in some presentations beforehand. If you have to have bank financing or think about bank financing from the beginning on, this could slow down the project to quite some extent. Some more experiences which we have seen here. Junior miners were more active, at least in Africa, or more interested in external finance solutions than the bigger mining groups. From the bigger mining groups, we have talked to quite of them. The answer pretty often was, okay, we have to have, at the moment we are assessing internally whether it is an interesting investment for us or if we are more going for external finance solutions. Junior miners pretty often, especially in this situation of crisis, were not really considering investing their own capital. So we got quite some feedback on this communication from junior miners, actually. Storage also is quite a topic. We have talked about it. What do you think is actually the opinion of investors of storage, of including storage? Our opinion at TH Energy is that actually the investors are looking for optimizing their IRR, and to go for low penetration projects is more in the interest of investors. So let's assume you build a 5 megawatt PV plant. You can still build this in this example without storage. But you could add as well storage and add an additional 5 megawatt. So for these first 5 megawatt, you have a much higher IRR than on the second 5 megawatt plus storage. So in the end, the natural bedfellows for storage manufacturers or storage integrators are actually more mining companies who could have more advantages regarding storage. So they have more cheap energy if the penetration rate is higher and if storage prices obviously allow for solar or wind energy that is stored to be cheap. And of course, there are as well some additional reliability advantages of storage. In the Juby presentation, we've already heard that PPAs are quite an issue, and it's a new topic, industrial PPAs, especially for off-grid mines. Not many companies are experienced in leading these PPA negotiations, neither on the IPP side nor on the mining side. So this is where we offer, for example, workshops. There are quite some aspects to be taken into consideration. And from a negotiation point, how do you start the negotiations in order to have a good end and to get out the best from your perspective, whether you're sitting on the mining seat, on a mining seat, or on an investor's seat. Some of these points actually we have agreed to discuss upon in the panel that is following. So I would like to conclude at this time and already prepare the panel discussions, which is just following. It will be actually about the same topic. We have then as well a little bit more the perspective from the banks, as well from the mining company. On the panel we have a mining company, a development bank, a commercial bank, and a consultant who works actually with off-grid mines in Australia, who also can give an interesting market insight for Australia, where we see quite some developments ongoing at the moment. So I just go on immediately.